please do share the post that I just put up at the top so we can get everybody in here. Just going to recirculate, guys. There's going to be a session in Discord with Andy, who is joining us in a minute. I was just talking with him on the phone, where we're going to be going through a ton of different opportunities on HyperLiquid. As you guys know, HyperLend launched on mainnet today. You might or might not know there's a 10% boost for points on HyperLend for Hypio holders. And if you have a HyperLend hat, there's only 50 of them. I think it's a 25% boost. So that's pretty cool. This is another lending platform, Hypurrfi, also made by a team of Hypio OG community members. So I'm really excited. We've done tonight Andy quite well. And he's going to be joining us. I believe also the founder of Hypurrfi is going to be on here as well. So it's basically going to go on for about 45 minutes. Let's start pretty soon. And then we're going to be in the Discord for Hypio NFT holders. Remember, make sure to verify your holdings. And yeah, it should be a great time. So we're going to be kind of engaged here for the next couple hours and trying to put everybody on game with Hypurrfi and then put everybody on game with the rest of the Hyper EVM. It's an exciting time. We're starting to see these building blocks of the eco come in place, and Andy is joining us now. Hypurrfi is a big part of it. Welcome, Andy. Great to have you here, man.
Check. Am I a robot?
You're sounding great, man. And I love the Square Hypio PFP. I think you're the first other Square Hypio PFP we have on Twitter yet. So,
Sick.
Yeah, I love it. Yeah, I just kind of gave them a rundown. I think the other founder is coming too, so he can request and we'll get him up here.
Here's a little info. I'm not a founder, technically. I'm like employee number one. I'm a founding team, but founder role, who actually goes out and raises money. That's Andrew, who is going to come, who might be on the Hypurrfi account, which is
under my heart. Okay, that's where it matters. So,
I mean, we all do work. It's good.
Yeah. What's it called? Yeah. So Hypurrfi, if you want to come up and talk too. But yeah, we'll give Andy a little intro. Andy, you've been around the block in DeFi since last cycle, I believe, maybe earlier. And you've been, like you said, a founding kind of person at the beginning of this Hypurrfi thing, and you've absolutely been spreading the word and getting everybody on here early. So I'm excited to get in this space. Do you want to give a little intro about yourself and your experience in crypto, and we'll sit down about Hypurrfi?
Absolutely. Hypios in the chat. Good to see you guys. I'm in my office with my dog kind of pacing a little bit. And I got kids running around because it's like spring break. And so if you hear screaming, it's probably good screaming. But yeah, my name is Andy. I've been in crypto for a while. 2017 was my first cycle. I had an academic career before crypto. So I was actually a professor of media studies. I was a social scientist. And when I got tenure, like you can study whatever you want. So I was interested in new technologies. That was my research area. I studied video games, actually. I did video game research. You can find my publications online. But then I was like, okay, let's do the next thing. What is it? I was, just ready to move on. And that it would happen to be Bitcoin. I was like, what is this thing? I'm the nerd that would know about this. So let me look in. And that was just right before ICO mania and right before Ethereum really did ERC20s and took off and like all that happened. And so I happened to like jump in at the right moment. Didn't make any money, but I got really like the bug on new capital formation and how all these systems work. And so I started dabbling, working in the industry in a few different places as a contractor. I did writing, I did research, I worked for a fintech. I left my job in academia and took a full-time role. And eventually in the 2020 cycle, I started working full-time in the space. I worked for Status. If you guys know Status, they're a great OG project. I worked for Ava Labs a little bit in 2020, and then I got a gig with Chainlink, and that was the most of where I spent my time in 2020 and 2021. And I did like video and podcast, and they let me speak in public about Chainlink because I wouldn't talk about token and REC compliance and stuff like that in general. And so that's kind of how I got my feet wet in crypto. And started working here. Eventually, in the cycle, I met my current founder, Andrew Lloyd. I think he's in the chat now. I don't know if he's come up, but he's got that cat GIF PFP going on. We got to know each other. We're both DeFi heads, and like we just started getting along. And then he came up with this idea. He and his co-founder have been working on this idea for a while. And so some of you guys might know me from Last Network, LAST. And you can still find Last. It's last.net. And the plan with Last was to build a chain that used sustainable tokenomics and incentives to really pay out to community and make a long-term sustainable network. And so that just got me hooked in with Andrew and the Last team, and we've been building that for about a year and a half. Well, one of the things that we had to do for Last was we had to build a lending protocol on a stablecoin. Like we had to have this kind of enshrined version. And so we built that, and we were getting ready to launch the chain and figuring out all the infrastructure and everything when suddenly HyperLiquid happened. And so it all happened. Andrew had been trading for a while, and a number of our other teams have been involved for a while. But we made the decision to launch the lending protocol on HyperLiquid EVM first before our own chain. And just turn this into a network of applications that make money so that we can pay out incentives and do this whole thing. So that's kind of like my genesis and how I got into this space and kind of what I'm doing here. I do growth, which means I get in the trenches and I'm in everybody's DMs. I'm talking to hedge funds. I'm talking to VCs. I'm talking to degenerates like yourselves, PFP, all that sort of stuff. And that's about it. I think that's me. A good intro.
Absolutely. Yeah, so there's a couple interesting things that you said there. By the way, guys, we just share the space if you have. We post up on the thing so we can get more people in here. But also, there's a new update about uBTC, which we're going to get into. It's now live on Hypurrfi. But Andy, there was one thing that you mentioned kind of about the plans. I love how you said like HyperLiquid will happen. I think that's a great kind of like catchphrase. I think everybody was doing their thing and then HyperLiquid happened. And it kind of happened to all of us. But so you were talking about your own chain, and it sounds like that's still part of the mix. And I'm just wondering, how does that play into Hypurrfi? How does the mix here look for Hypurrfi as a lending platform, and also how it pertains to you guys, your own chain and Hyperliquid?
Yeah. So Last is a network. It's not necessarily a chain. It might be a chain in the future. It could be, but it's a network. And if you think about what a network is, it's just a group of operations strung together, people and applications and whatever it is. The point of it all was to have incentives that make sense for a community to use them and for them to have value without it being a dump fest, like an L1 or L2 token dump fest. And because we were sick of that. We've been around for that. We've seen it. And so really the mission is we need protocols that make money, that have revenue, like a business. It's like a business. It has to have inflows and outflows and be an economy. That was the mission. The mission wasn't just to build a chain for the sake of having a chain. The reason for the chain is there was good economics around that and token sinks. But then, once we really realize, we can make great tokenomics and we can make great revenue with an application as well, so that we can enable some of these things. And so really like when we look at how we build, Andrew and his co-founder say this a lot. It's crawl, walk, run. So do we want to launch a chain and try and get it started? To do that, that would be really extensive and expensive, and it would take a long time. We'd have to figure out a lot of stuff that wasn't live yet. And so it was a waiting game. Or on the other hand, we could launch an app right now that we were going to launch anyway and get going and get moving. And so we have, and especially when you look at HyperLiquid and the opportunity here, it's active users. That's the opportunity. It's people who care about finance. It's people who care about trading. It's people who care about being active and doing more with their money. And so let's build an application that lets people do that, because those are us. That's us. We want to do that too. I was just telling you earlier, I have skin in the game right now. I'm using the EVM. I'm using HyperLiquid for my own personal finances. And so whether or not it's a chain doesn't really matter. Maybe it will be in the future. It might make sense to be. But right now, what makes sense is making products for users.
Sure. So it sounds like this journey with Hypurrfi sort of began with Last and the USDXL coin. My understanding, I have a bunch of USDXL. It's one of the first coins available on HyperLiquid that is stable, as far as I know. And my understanding is it's an over-collateralized stable coin, which means basically you put in something like ETH or Solana. I don't know about Solana, but ETH or HyperLiquid. And I think in this case it's Hype. And then you basically are able to mint by borrowing against your Hype. Is that correct? And what else how does USDXL work?
Yep. That's the gist. So Hypurrfi, it's a lending protocol. So the way I explain it to people who are not familiar with DeFi or lending protocols is it's kind of like a money market in a bank. So a money market in a bank, you put in your funds, they use them in activities, they invest, they give people mortgages, and then when people pay their mortgage, the interest that the bank is making on that mortgage goes and pays back to the people who've deposited in the money market. Now the bank takes a rake, and the reason for the bank is they hold the funds and they manage that, they do due diligence on everybody. Well, in DeFi, we just take out the bank, and we have peer-to-peer lending pools, essentially, is what it is. And so what Hypurrfi is, it's a set of contracts where you can go and deposit your Hype or staked Hype or some other stuff that we'll announce here in a minute. The tweet has gone out, so it's not a secret, but it's fun this way. And if I want to go borrow that, I can. Now, I can't borrow all of it, right? I have to put up some collateral. I have to put up my own deposits, because if the value of my collateral goes too far down, then the person who's lent out the asset that I borrowed, they're going to lose out on the trade, and that's not fair. So the way these contracts work is, instead of a banker in the middle deciding, managing those funds and who gets what and managing the interest, the smart contracts manage that. And so it's called an over-collateralized lending protocol, over-collateralized stablecoin. If I want to deposit $1,000 worth of Hype, I can't take out $1,000 worth of USDXL. That's a swap. That's a trade, right? That's a different sort of thing. Instead, I put in $1,000 worth of Hype, and maybe I can only take out $300 worth of USDXL. Because if the value of that Hype starts dropping, and all of a sudden, Hype crashes back down to 13, let us not have it so, then all of a sudden that $1,000 worth of Hype is not worth $1,000 anymore. And so the person who has lent me the USDXL, well, now they're screwed. They're on the bad end of that trade. So the way these protocols work is there's a liquidation threshold, where if the value of your collateral gets way too low, then it gets liquidated and it gets sold. And you keep the borrow that you did. You can pay it back if you want, but you keep those funds you borrowed. But the person who has deposited, now that pool has been made whole again in that way. So the smart contracts manage that whole thing. So that's what Hypurrfi does. So USDXL, it's a stable coin. It's pegged to $1. If you can take out a loan, so you deposit $1,000 worth of Hype, you take out a loan for $300. Now you got to come pay that back. And when you bring that back, you're going to be it's going to get paid back at $1 value. So you bring back your USDXL, you pay back your loan, and then you can withdraw the collateral that you deposited again. So you always have access to your funds as long as you maintain good collateral ratio. So that's kind of how it works, is the contracts maintain that. The contracts set up those liquidations. They make sure that value is the same. For the redemptions of USDXL, when you pay that back, for those repayments, not redemptions, sorry. That's kind of what is happening here.
Awesome. So something we do a lot of times, I don't know if you've been to our other Spaces protocols, is we really dumb it down just for people who are not DeFi native at all, right? So let's just kind of walk through some aspects of using Hypurrfi, for instance. We'll talk a little bit more about Hypurrfi at large, and we can get into uBTC in a minute. But let's say, for example, so I have my Hype and I'm depositing it in there, and I deposit, $2,000 of Hype, $2,000 USD worth of Hype, and I borrow, I think I could probably borrow $500 of USDXL against it, right? Roughly within the risk.
Sure. Yep.
So as far as the liquidation, how does it work? Let's just explain the risk and why you wouldn't want to take out the max that you could, or why you would, etc.
Yeah. So we have something called loan to value ratio. So there is a preset limit that says you've got to maintain this ratio, this amount of collateral, this much value in Hype, in order to keep your loan and keep access to that Hype. So if the price of Hype crashes, if it just plummets down, then all of a sudden your collateral isn't worth nearly as much as it was. But the loan that you took out, the USDXL, that's still worth $1. So what happens is, if the price of Hype starts crashing, you have to fund your account. You have to top it up. You have to add more Hype, or you repay. It's just a lot like using leverage and maintaining your leverage, right? Leverage is essentially a loan, is what's happening on a perps trading platform.
Absolutely.
So it's the same principle. Is you've got to maintain your collateral, you've got to maintain your position, and drop your liquidation level or repay or whatever that happens to be. So that's the same. It's the same principle there. And so on Hypurrfi, you can go and see if you go and deposit, it gives you this loan to value ratio, this sort of collateralization, you can see here's kind of where we think it's generally safe. And right now we got everything set really conservative. It's super low. There's a really low chance that hype crashes down as low, to if you have like a reasonable LTV, because right now we're building the markets. We're trying to be very careful. Now, there's not no chance, right? Hype could crash. There's weird things that have happened. COVID happened. Those crashes can happen. So there is risk. There's always risk. But right now we're trying to keep things very low risk so that we are testing the system, so that our users are testing the system, so that the EVM has a chance to thrive and learn about DeFi and see those opportunities. That's part of it right now.
Awesome.
So here's something that people ask me is like, why do I want USDXL? Why would I want to take a loan? And so there's a lot of really interesting use cases for lending. So if you think about leverage on HyperLiquid, excuse me, you can't get leverage on your spot hype. You get leverage on perps, right? So really, that's kind of like leverage on your USDC and not leverage on your spot hype. And you've got the spot hype sitting there and it's not doing anything. You can stake it, you can make 2% on chain, but it's not doing anything else. And so what we find is people who are going to hold spot assets for some time, they might want to lever up on that. Or what we see a lot of is if you go and stake your hype, well, you can make 2%. But you can lever up on that yield, actually, because now we've got liquid staking tokens on the EVM. And so this is the major use case right now where we see the most TBL that's flown in, is because people are depositing staked hype, using it as collateral, borrowing hype, going and staking that new hype, right? Because now you've got, not twice the amount, but 1.3% the amount of the stake type. So now you're levering up on your yield, which is significant when you're talking about size. So those are some of the cool things you can do. And then we'll get into, some of the fun stuff with USDXL, right, in a little bit as well. But that's a good start, at least.
Yeah, absolutely. So just like, again, like sometimes I try to be cognizant there might not be people who are super DeFi native. When you're talking about levering up in your hype, basically what you're saying is you borrow against your hype into USDXL and then you buy more hype with USDXL is the type of thing that you'd be doing. Yeah.
That's a classic leverage play for spot hype. Absolutely.
As far as just to kind of clear up the USDXL for dummies, we already talked about it's an over-collateralized stablecoin and how that works. How does the peg itself get maintained? It's always one of the most interesting parts of how stablecoins work.
A couple ways. So when you repay, we take USDXL at $1. And so if you're on a DEX, if you're on Hyperswap and USDXL is trading for 98 cents, you buy it up. You want that because now you've got USDXL at 98 cents and you can bring it back and repay your loan at $1. You made 2 cents on every dollar. So you are incentivized to buy cheap USDXL. Now, what happens when you buy cheap USDXL? Price goes up and it goes back up to $1, right? That's how it maintains its peg. Well, what if it goes over $1? It's worth $1.05. Well, you're gonna repay your loan at $1. Why do you have that? Sell that, right? Sell $1.05 USDXL, and when that happens, the price goes down. So that natural arbitrage is what maintains the peg. Is because when you come and repay, we're not giving you $1.05 worth of hype. No, we're giving you $1's worth. So that is the natural sort of arbitrage that happens on that peg. And as markets grow, so right now we've basically got Kitten Swap and Hyperswap. There might be a price differential from USDXL from one to the other. And if you're getting 98 cent USDXL on Hyperswap and you're getting $1.05 USDXL on Kitten Swap, you better go buy that on Hyperswap and go sell it on Kitten Swap. You're making money there. Now, it doesn't work at
or borrow against and sell, right?
Yeah, exactly, right. Now, just as a heads up, it doesn't really work in small size. That's one of the things I've learned in DeFi is if you're playing around with a couple $100, even a couple $1,000, it doesn't work that well for you. You're not going to make that much because there's transaction fees, there's slippage, there's all sorts of stuff, especially in low liquidity markets like the EVM is. So as liquidity deepens, as size increases, as people come in and actually do want to do more with money, then those arbitrage opportunities get really, really exciting for larger players because now it's a quick arbitrage. They can buy it for 98 cents and sell it for $1.02, and they've made 4 cents on $1 million. Well, that's significant, right? That's a great day's work. I'll take that any day. So that's kind of the balance, is we're still trying to figure out we're still trying to make sure we're deepening the book. Liquidity is good.
It's such early days.
Yeah, absolutely.
So that kind of goes back to what you're saying about the amount of assets you're letting and how much you're letting people lend against, because it's like, this is the foundation of what, the stuff. It can sound simple when you describe it, but it's quite complex once you get to real amounts of money in this system, and it has to make sense.
Each individual piece can make sense. And when you start stringing them all together, that's when it gets complicated, right? That's when it gets weird. And there's things that are really different. So for example, like liquidations, for example, if you get liquidated on a levered perps position, there's only you're only dealing with dollar value because you're denominated in USD, right? Your collateral is USDC. Well, if all of a sudden your collateral is a volatile asset, it's Hype, the price of Hype goes up and down much more significantly than USDC, right? Well, so all of a sudden the value of your loan that you've taken out is moving, like the price of an asset, but also the value of your collateral is moving. So the concept is the same, but all of a sudden we've added this one additional element of complexity that does make it a little bit different to manage. And so you do have to kind of sort of step back and say, okay, well, we take these basic principles that I understand, collateral, leverage, and then how does it apply when we add these new things? And that's what is really cool about DeFi is, well, we can start adding those things, and we can find permissionless ways to do them, and we can add that. It does add complexity. And so there are things in DeFi, plenty of things in DeFi that I don't get. Like, I know them, I can read them and I can understand them, but they don't stick in my memory like the way that some of the stuff does. And I just stay away from that stuff. I'm not ready for it yet. And that's me being in this space for quite a while. And that's okay too, right? Take those steps, like slowly understand what you're doing before you ape in too strong. I got to chat on the phone, see if anybody's messaging me, see if I'm blowing it here.
No, you're doing great, bro. Nobody's breaking glass. That's why, I know for the people who are, have been around even for a few years, it can be kind of tiresome to go through all the stuff. And, you're a great sport and you're really great at explaining it. But there's a lot of people who, even if they've been around, they just don't know how even like a liquidity pool works. You know what I mean? So one thing I'd like to do now, let's just say I had 10 Hypios, whatever. I bridged them over and I sold a couple for Hype. And now I'd like to get putting my money into these protocols, and Hypurrfi being one of them. What do you see? And we can talk about uBTC on the tail end of this, but what do you see as sort of like, why would I be using Hypurrfi? How would I be using Hypurrfi? Just as sort of a brief primer of that.
Yeah, there's 3 reasons, and I want to encourage everybody, go play with it, go deposit small amounts if you're uncomfortable. We're open to large amounts too. Let's just check some numbers right now. We've got, let's check the markets tab here. We got 25 million in TVL, so people are comfortable depositing assets with us, so feel comfortable. And if you're dealing in size, whatever that means to you, reach out in the Telegram, reach out. We're happy to talk to folks to kind of help them through this. And our community in Telegram has been really good, coaching each other and helping. We've seen some community leaders emerge. So please do that. But why would you? The benefits? Well, 3 prongs, 3 reasons right now. The first reason is APY. So you're getting yield on the assets you deposit. If I deposit Hype and somebody borrows that, the system pays, you pay interest into that pool. That interest then goes to,
you become the bank.
Goes back to, yeah. Well, banks rely on user deposits. We just take the bank out of the equation and you just get the interest. You get the APY. Now, a bank can come in and say they can offer a fixed rate. These pools don't have a fixed rate. The rate is depending on demand. If there's a lot of demand for Hype and you deposit Hype, then people are going to pay more for it. And so if you go and see, there's on the markets page on Hypurrfi for right now, staked Hype has a really low APY. There's not a lot of reason that people would want to borrow staked Hype, because what people want to do is they want to go and stake the Hype and get the yield and the points, and then they want to use that as collateral. So nobody wants to borrow staked Hype. What they want to do is they want to borrow Hype. And so if you look at the APY for Hype, it's higher right now. And so people are paying more for Hype. And so if you deposit HYPE, you earn APY on that. Now, right now, those numbers are still pretty low. That's because we're keeping the pools really conservative and being very careful about how we do that. But that's thing number one, is you're gonna make money on that. Well, now, if you look on there on the other side, why would you borrow? Because now you're paying money too, right? It costs money. It's a fee. And people borrow for a couple of reasons. The other prong is points. Everybody wants the points. The points are out, baby. Let's go. It's point season on HyperLiquid EVM. Kitten Swap's got them. HyperSwap's got them. HyperLens got them. Felix probably got them. We got them. Everybody, Hypio's got them. Like, everybody's got points. So whatever those points turn into, people are farming those points right now. And we incentivize the things that we want to see on the protocol with points. So something really valuable to us is people borrowing USDXL. Because there's a fee for that. That's how our protocol makes revenue. That's like how the thing works. And so we're giving people points for doing that. And there's a list. You can go on the Hypurrfi site. There's a points button that we recently updated to show you, here's what earns you points. Soon, and I know our community's been asking, like, when will we see your point updates? Soon, we're working on that. We're making sure that it's done right, and that we can give you a points balance that makes sense and is good. So those are two reasons. One is APY, and that's kind of like the long-term reason is people are using their money to make other money. That's how Aave works. That's how Moonwell works. That's how all these lending protocols work, is they're paying out APY. The second reason is points. Now, we can blend those together too, because people are also borrowing assets to go farm points on other protocols. So Kitten Swap, for example, on HyperSwap, they'll give you points and you earn APY from them. You earn interest from them if you LP. And LP is a little more confusing, so I won't get into it on this instance.
I think we might have the Discord thing after, right? A little bit.
Yeah. I'll show the Discord, and I'll show how that works too. So you can go and earn on APY on other protocols, and you can go and earn on Hypurrfi or wherever for borrowing and lending as well. So those are the two major reasons. Is it's profit, it's self-motivated. We love the technology, we love the community, but if you can't make money doing this stuff, it's not the best business model if we're talking about financial products. And so that's why people are doing it, is they want to make money in a couple of ways. So those are the two main ones. The third one is if you've got exposure to Hype, if you've got exposure to HyperLiquid Hypios, the larger we can grow this network, the more economic activity that we have in the network that feeds back into HyperLiquid and Hype itself, the better. Number go up on Hype if we make the EVM work. People are participating right now to be early to help support that HyperLiquid vision. There is really good, cool stuff happening that combines the DEX that people use, the perps DEX, with spot assets, with finance of all different kinds. And so by helping to grow the EVM now, what it does, it shows large hedge funds, people with size, people with, who don't blink at hundreds of millions of dollars, transacting that in a day. They want to take a look at HyperLiquid, like, what can I really do here? Is this the house of finance? Well, they can't do that if there's no liquidity. You can't just show up and be there. And so the people who are participating now are helping to seed that. They're helping to grow that. And it really is. We do see a lot of that. I see that in the chats. I see that in some of the whale chats. I'm not a whale, but I get invited to some. And that's what people talk about. It's like, okay, well, I got to move some stuff over from the exchange because I got to support the EVM because that's how we grow. So I do think that is a really important reason.
No, that's one of the things, we talked about it kind of like on I think our last 3 Hypio spaces. I've used this example, which is, Andy, if I owe you $5,000, that's my problem, right? But if you owe me $500,000, that's your problem, because, it's like, no, it's my problem. Sorry, it's my problem, because how am I going to make sure I get that? And it's kind of what Jeff has done with this massive airdrop, which is all these people have been given a huge vested stake in HyperLiquid, right? Well, what happens when you have a massive amount of money is suddenly you get aligned to helping it become something real. And that's something that happened with our project. I would imagine if you were on HyperLiquid, it's probably part of why you started building here. It's definitely the vibe with a lot of people.
I was not. I did not get the airdrop.
Well, it's even better. But
I'm very sad to say, I saw a passion, and not just passion for no reason, passion for people who want to use the products.
Yeah.
The reason people got the airdrop is because they used the product, and that is, especially in crypto, when we talk about permissionless systems and self custody and things that I care about, we need real users actually using. And so that's what I saw, and that's why I'm here. So no, I wish I got the airdrop, but I'm a bad trader.
I'm advised to help you guys build this out and build out this infra on HyperEVM so that HyperLiquid can be this robust DeFi ecosystem. I want to hit a couple points because this is an abbreviated space. Normally we go for a little longer, but we're going to do our Discord thing and give people time to get in there in the next half hour. So I want to hit a couple other points about Hypurrfi just because this is we've done a lot of spaces with protocols, but you guys are one of the only protocols that's actually up and running and like accepting deposits. And now more and more of them are coming, but there's different things that you can talk about. So I want to ask kind of two-parter. First part is, let's talk about some of the other assets on Hypurrfi. I have some questions there, and then the future of Hypurrfi. So on the first part, now you have uBTC. You can't deposit USDXL and gain APY on that. I'd love to know why you can't. Is it because there's just this kind of too systemically engaged with everything, or is there the reset?
Yeah, exactly.
Yeah.
If you deposit that, it's just a repay, because the only way to mint it is through Hypurrfi right now. So it just ends up being a repay.
Yeah.
We're talking about vaults and how that might work. But right now it makes way more sense for everybody in the ecosystem, but especially us, for USDXL to be out in LP pools on DEXs. People should be transacting with it and use it as a way to move from Hype into something else, into stability, or from, there's a buddy pool out there, right? If it gets real volatile, if, there's tariff panic and buddy plummets, maybe you want to get into stables for a little bit and buy it back lower. Like, there's a real use case for that. So it's way more valuable to have a stable out there. And it's valuable to have multiple stables out there. I do want to say that. It's not just a pure dominance game. It's an ecosystem play. Like, we need to have liquidity across a number of different assets, including stablecoins.
Absolutely, and it's incentivized on these DEXs to do that with USDXL.
The DEXs need it. Yeah, that was the killer use case. And so we're working with all these DEXs, a number, and some that are not that announced and known yet. Like, we're deep in the trenches with everybody, building as many people as we can to try and give points incentives to have people stake and do that. So right now you can't bring last USD into a vault on Hypurrfi, but Hype can be collateral. I call it naked Hype. It ends up being wrapped Hype. So if you see W Hype somewhere, it's Hype and W Hype are basically the same thing. It's like wrapped ETH and ETH, basically the same thing. It just changes how the token is used by contract. So it's just a technical way to deal with the token. There's also staked Hype. And you might also see wrapped staked Hype, which is WST Hype. And that is a technical differentiation. We're coming out with a blog post on it in the next, hopefully, couple of days as well, for the people who want to dig in to that. And then just added today, the unit Bitcoin. So we have unit Bitcoin that is collateral on Hypurrfi. I don't know what the LTV is for it. I don't know what the is, because I literally did a test transaction like 10 minutes before this. And so
35K supplied already, about 0.4 of a uBTC is not right.
Okay, cool. Okay, how much is in there? Oh, the utilization rate is how much is borrowed. So some people have tested the borrow. If you want to deposit staked Hype and borrow Bitcoin, you can. But Bitcoin is great collateral. It's a great asset.
Absolutely.
Deep liquidity all over the space and beyond. And so Bitcoin is a really strong collateral asset. Don't anticipate a ton of borrow for it, but I could be wrong. Some people might want access to it. But that's great collateral. So that's what I'm doing after this. I'm going to go deposit some little bit of Bitcoin. We have been working with the Hyperunit team. They're the guys who brought Bitcoin native spot onto HyperLiquid Exchange. Other assets are coming soon. I've seen leaked screenshots of ETH as well. They're the guys who are facilitating those natural transfers and making sure that Bitcoin is real Bitcoin. It is wrapped and verifiable, and things like that. So we love those dudes, Shoku and them. Shoku was in the Telegram last night, shit posting with us too. So that was pretty fun as well. Yeah, I'm excited about that Bitcoin one. That's brand new today. So just been bridging and having fun with that.
I think Hype and BTC, that's like the safest barbell. You could add in Fartcoin or Buddy or whatever, and then you get some upside. But no, it's funny that you mentioned Buddy, and it ties into what I think, it might be early to be talking about the future of what's going to be happening with Hypurrfi, but let's just talk a little bit about, obviously you're focused on the execution of Hype and doing that sustainably and safely and expanding the amount that people can lend and borrow, et cetera, slowly over time. Same with BTC and wrapped stake type and all that. Those are assets that, everybody kind of sees as the strongest ones, and they make the most sense for demand. But over time, these lending markets are probably going to start differentiating with the assets that you'll be able to lend against. So there's a couple that I think would be interesting to mention, just to throw out some examples. Buddy, for one, I think is a particularly interesting one, and why you might not be able to do it, or when you might be able to do it, or if you would want to do it. Per is a more stable, larger coin, whether it would happen. Stuff like HFON or big coins that end up being big market cap coins and end up being pretty stable on HyperLiquid. And then even, for an NFT project, personally, I think NFT lending is very risky and tough to do. But I would just love to hear about sort of the future and what kind of assets do you think you might be expanding to, or do you think you're going to focus on what I think are, Hype BTC, stake types? Those are really those like prime, really solid assets.
Yeah. No, happy to talk about all of it.
And what parameters for all that kind of stuff, you know what I mean?
I don't know the parameters yet, but I'll tell you the logic behind getting there. So our primary concern is to have a secure platform that manages these lending contracts correctly, accurately, every time. Like, user assets are the most important thing. They are not mine. I'm not handling. They're yours if you're depositing, and they need to be secure. And that includes, so if you're a lender, that means when somebody has borrowed and their position needs to be liquidated, it goes down. Those liquidations need to happen correctly and accurately so that everybody in the system is made whole according to the rules of the system. That is the most important thing. And to do that, that means deep liquidity for the assets that we list. So that is our most important goal right now, is deep liquidity, not just deep liquidity. So you said something like Per has a large market cap. The market cap is great, good for everybody. Go Buddy. We were up to whatever, 9 million today. I don't know what it hit. But the most important part is the liquidity and the routes for that liquidity. If we need to liquidate your Hype, how do we sell that? Right now, it's hard to get it back to the exchange, like in an automated process. Like it's difficult. Those systems have not been built yet. That's what, if you've heard people talking about the pre-compiles, that is, that's one of the things that's coming on the pre-compiled, is ways to make that a more seamless operation. But right now, that's not easy to do. So we've got to be very careful with how we select assets to make sure that we have good liquidity routes as well. And that will come as, value flows to the chain, as there's more stable coins, as there's more bridges and all that sort of stuff. So when we look at assets, the model that we have now, this is an Aave pooled model. It's an Aave fork that we have. But there are other models for lending as well called isolated markets. And I'm actually going to tap in my founder, Andrew, for this one, because he created an isolated market lending protocol called Starport. It's a protocol, and it was live on Asteria for quite a while. And that's where he came from, his background. And then last, the parent organization actually acquired Asteria as well. We put out an announcement about that a little while ago. And so isolated markets are where things like assets with that might not have the liquidity routing that Hype or Bitcoin or something has. Those can thrive, including potentially NFTs. So if you can bring Andrew up.
You got Andrew, thanks. What's up, Andrew?
Yeah.
We got two Andys in here.
Yeah, I know. We're Andy and Andrew. It's brutal. But
everybody, sound check. Make sure it's good.
Yeah, you're good, man.
Great.
Welcome.
Well, so I'll let you take it away. What's the future of Hypurrfi, buddy?
Right, buddy. Yeah, I mean, we have a lot cooking in the lending space, but we really think about it beyond just lending. Like, I would say we're like a big part of our name is like the Phi is truly in finance, rather than just lending. So we really just look at the space in general and say, like, we haven't had this opportunity where there's going to be this true Cambrian explosion of assets, capabilities, potentials, composition, structured products, lending, derivatives, swaps, you name it, that we haven't had the ability to construct properly beforehand because the collateral base just was not deep enough and varied enough. Everything, if you think about where the chain it comes from, is typically, like a function of its own internal economy. And so we never really had a great place, bridges excluded, where you could actually have, these deep asset categories. So NFTs are one of those things that are really interesting. So you can look at your typical NFTs, your Hypios, the PFP style NFT. That is one very, I would say, niche market in terms of what an NFT could be. Lending against them is typically risky because liquidity, it's all based on what the active market. Like that's your real fallback in terms of, most lending markets is like what you can actually liquidate into. So how much, open bid offers exist out there for your collateral is really the determining factor as to how far and how aggressively you can lend against anything. But isolated markets are pretty cool compared to a pooled market. In a pooled market, all assets are inside the same environment and they're kind of like exposed to the same boundaries of that environment evenly. So, a great example is if you had an asset that you could supply to a market and it had price capitulation, some of us may be familiar with what happened with Curve, some may not. There was a large Curve position that was quite exposed and it was available to be a collateral inside of some Aave markets. So I think Aave V2. And so there was no boundary box in terms of like that you could draw around the Curve exposure. So if you were a lender to the Aave pool of any asset and like Curve became, impossible to liquidate at size because for whatever reason, you would, face bad debt potentially. Now, luckily that was, repaid and there was no systemic risk there, but there are real challenges around servicing, assets that in liquidity crunches are quite duressed in terms of their open offers or open bids, which is why you typically look for, really high quality collateral. But the future, of what we have coming here is all around, carving the risk spectrum to best suit a lender, to be in a position where, they can really dial in what and how much they want to lend and under what conditions, and make sure that they're, maximizing what they want from a lending position. So, you could look at getting buddy exposure, but, adding buddy to a broad pool and allowing it to be a part of an overall broad lending market. My money says, buddy is going to be a really great and deep resource for on-chain like meme coin trading. When it comes to the lending environment and like, how wildly, prices can fluctuate on meme coins, like you could find yourself in a position where a pool was able to borrow more, in some period of a crazy pump than, could ever be properly recovered. And so there's a lot of boundary boxes you need to kind of like draw into this stuff that make these things really hard to allow inside the pool. So you can think of our pooled model as being like our core vaults, where the only thing we put in there is like the highest quality assets. And that's where our stablecoin is produced from. And then we have isolated markets that allow us to kind of like build these buckets of risk that have, really strict guidelines in terms of, what happens if there's insolvency or whatever, like there's no spillage to other markets. And so trying to enable a way that we can have, quick access to great clean leverage and, in a way that it makes it really easy for anyone who wants to participate to understand like what's the true, total exposure you're taking on here, but also give a way for the community to also curate some lending markets that they want to see. We want to be open and, able to work with whoever, wants exposure, whether that be in the isolated or the pool side. The pool side is where assets would have to graduate into, once they've shown significant like demand, liquidity, and like I would say robustness in terms of, being utilized in like an isolated market. And even still, you'd have to have really finely tuned params around any of that stuff.
Yeah, so it could be like you can lend, like let's say Buddy, for instance, let's say Buddy goes like 20 mil and it ends up being pretty stable and ends up being something that it's utilized in a platform like yours. It still might mean that you could only lend against like 3% of the value or something like that. Is that what you're saying?
Yeah, exactly. Because you have to take into account like when a liquidation would happen, it's not happening under happy conditions. Typically, it's happening under significant market duress. So who is that buyer in duress times, less so in the happy times?
Absolutely. So that's kind of a rough preview. I don't know. I think we should wrap in a couple minutes because we do have our thing in Discord and we want to give people time there. But maybe we can just, since we've got both of you up here, we can just sort of what's the last kind of comment on why you think people should be using Hypurrfi? What do you think the role of it is in the long term, and why should the people in the space jump on there and get in the mix?
Well, we say isolated markets are coming, and that is the case, but there's more. There's lots more. And there will be significant opportunities to participate in a wide variety of financial applications, decentralized financial applications, where you are an active participant and beneficiary of revenue from the system. Like it ain't just a lending protocol, man. There's so much we can cook. And if you think about all the assets that are out there in crypto that could come on HyperLiquid, that's the starting line right there. That's where we just started with BTC today. We haven't even seen the pre-compiles yet. And so when we start talking about, I'm in these chats and everyone's like, is anybody building an options protocol? We got perps. Do we have options? I haven't seen one yet.
There's a few.
All right.
Not set up.
So like
that kind of reminds me though, like you're saying, BTC now, the stocks in 2 years. You know what I mean? Like where can this go? That's pretty exciting.
Index funds,
commodities, the index fund,
like
absolutely.
Like the opportunity. Jeff sees, right? The home of all finance, and that's not just a perps dex. That is a broad ecosystem that uses this trading base that they've built, this amazing trading base they built to work together. And so we are not ignoring that, right? This is just the beginning. And as we build the liquidity, we build the user base, we get people understanding how these things work, it gives more reason for larger funds to come in. And we see that more and more size coming in, and we see larger deposits coming in as people get more comfortable. And so that is the roadmap, is let's be a home for finance. On-chain finance makes sense. So that's what we're here to build, is not just a lending protocol and not just a stablecoin, but to use those to make really high yield financial instruments for whoever wants to participate in them. Like that's what we're doing. We're building products that people want to use. So help us get started. Like that's my call to action, is like, come deposit something, right? If you don't know, if you're not sure what to do, you don't want to borrow, that's fine. Jump in the Telegram, say, hey, ask me, like just do a reply to any of my posts. I'm perpetually online. I can't log off. The other thing I want to leave you at, and this will be
actually, I had one other thing. Maybe
I
don't know. But then we can do that. Then let's wrap like in a couple minutes, just because we want to get people in the Discord. But we didn't even talk about the points. I know that you have kind of a linear, transparent point system, right? One question that I have is there like a cap on the points limited per week, and just anything else you want to talk about on the points?
So with the points, there's two things to know with the points. One is we find the HyperLiquid team's points system very effective. And so generally we're modeling after that. Those are sort of the details I would like to give about allocation and how that generally works. But we do want to incentivize people with points to do valuable behaviors. Deposit, borrow, LP, help us achieve the mission. The second thing, I forgot what I was going to say. So points. What was I going to say about that? You can go and see, like the points are about, this is important. If you did stuff before, you can see your points balance. Like right now, we don't have your points balance for you. But if you've deposited, since the beginning, those points, we are counting those. Like we're looking back on chain. We know who is there or what wallet address is. The reason, like you mentioned linear, the reason we're doing linear is it is not worth it for you to Sybil attack and like deposit $100 on 1,000 accounts. That doesn't do you any good compared to just doing $100,000 in one account. Same difference. So we want real users. We don't want Sybil attacks. And so linear is our general philosophy on that. But come in and know that those points are being calculated, rewarded, and we are getting those 5.
Is there any cap on points that can be distributed in total or on a time-based thing or anything like that?
TBD.
Okay.
The other thing I want to say is that we're excited about is like we're cooking right now. Like we're working 20-hour days and just cooking, not because it's all Hypurrfi, but because all of Hyper EVM is also cooking. Like I'm trying to get in Felix Pulse. I'm trying to get in Hyperland. I'm trying to get in, I'm in Kitten. I'm on HyperSwap. I'm like doing all the stuff. I'm tracking my points. Like there's so much going on. And as a builder, like, we are pretty early and have a large TVL and a lot of users. And that means people come to us and they say, hey, let's integrate and let's do stuff. So let me just tell you from the DMs, everybody's coming. Like, everybody look across the chains and all the DeFi protocols and everything. Everybody's coming. All the infrastructure, the funds, like, it's a wave. Everybody's just getting ready and figuring out how they want to do it the best. The technology is slightly different. The liquidity pathing is slightly different. There's some established players, and there's not a ton of liquidity on chain yet, so on the EVM yet. So people are getting in position, but man, it is cooking right now. So get excited is the thing. And then come into Discord. I'll share a screen. I'll kind of show you my flow. I've got some funds that I'll move from HyperLiquid exchange all the way through the DeFi process to show people kind of how to do it.
Awesome. Thank you guys so much for coming. Yeah, we're going to be continuing this. There will be about a 10-15 minute sort of crossover period into Discord. So make your way over there if you're a holder into our Hypio. It's discord.gg/Hypio. We will try to get everybody in there, and Andy will be running some stuff. And then Andy will stay as long as he wants, and then we're going to be running through as much as we can and talking about liquidity pools and a lot of this stuff, the kind of the nitty gritty. So I really appreciate both of you, Andrew, Andy, coming on, talking about Hypurrfi and sharing the info you have, and it's been a blast.
Yeah.
We will
follow the Hypurrfi account for all sorts of announcements and, important stuff there. It's in my profile, and it's giving all sorts of purple hearts down below. So follow that. Thanks, man.
Yeah, and I just say thanks for having us out. And like to Andy's notion earlier, like we are so early. Like the people we've had to debug that have yet to even be able to get in to do the things they want to do. Like we've been in the back helping anyone that needs help facilitate issues going through the flows. So yeah, there is a lot still to come. So everyone here, consider yourself incredibly early. I'm really excited and thankful that you guys have been supporting us, and looking forward to seeing you there on the chain.
Hypio.
All right, guys, we're going to move to Discord. It'll start about 10-15 minutes. Thanks again, everybody. See you there.